Hello and welcome. This is the Market Trap. I'm Agam Vakil. Well, we're live right now, and before we start and take a look at the markets, let's also take a look at Wipro. The IT majors' earnings are out right now, and the numbers, while they're looking largely in line, there's been a little bit of a miss when it comes to the top line, as you can see here. Pardon me. So we do have the net income, of course, is, when it comes to profitability at 2,400 crores. Just a tad ahead of expectations of around 2,300 crores. And in terms of revenues, while revenues stand around 14,720 odd rupees against expectations of 14,840 odd rupees, there's been a little bit of a miss. But I'm also told that the EBIT margins for IT services revenues have seen an improvement. And as you can see, the net income has been higher by as much as 3% in comparison to estimates. Now, when it comes to Wipro, there are a bunch of things that we were watching out for. The reason why we have seen this decline in revenues is largely on account of the fact that the company has divested one of its units, Workday. And of course, while this was on anticipated lines, the other aspect that we were working with was the decline in margins. Why? Higher visa costs, wage hikes, which is a part of seasonality for the entire sector for that matter, and the stronger Indian rupee against the US dollar, which has also worked against the margins. And that's possibly the reason why we have seen this decline come through for Wipro. The other aspect we are also keeping an eye on is how the banking financial vertical has done, and yes, as to what sort of growth it's seen, because we're getting mixed cues from the likes of TCS and Infosys. So while Infosys has actually seen growth, TCS actually saw a decline, and Accenture painted a completely different picture. So that'll be one important factor to watch. And the other one will be healthcare, as well as healthcare as well as communications. So that's something that we'll be watching out for as well. Now, moving on, of course, besides that, we will also be watching out for the total contract value, which should be up on your screen in just a few moments. And of course, the total contract value will be very important because we have seen that kind of momentum in the entire sector over the previous few quarters. And on that note, actually, let's get in our voice here. We do have Dipesh Mehta, who looks at the sector very closely, to talk to us about that. Dipesh, hi, thanks for joining in. Tell us, what have you made of the numbers? What's your initial take?
Yeah, so broadly, I think I haven't gone through the numbers in detail. But prima facie, looking at the overall number, it seems to be broadly in line kind of number. EBIT margin is slightly higher, but it might have implication of the lease accounting change which happened.
Okay, Dipesh, just hold on. I also have Trip Chaudhary on the line, who looks at the space very closely. Trip, thanks for joining in. What is your take on Wipro? Largely in line with your expectations?
Yes, it is. It is in line. I think the industry sector as a whole is recovering, and Wipro will be a beneficiary of that.
Okay, Trip. So in that case, what have you made of the kind of deal flows that the big 3 or 4 companies are seeing in the sector, and how would you compare that to Wipro?
I think they are almost in line because in few quarters, certain companies get different quantities of deals. So I think generally, there is a good tailwind in all of the bigger IT services companies in India.
All right, Trip. The other question is, while we are looking at that seasonality playing out as far as margins are concerned, with wage hikes and visa costs coming into play, in the long run, when it comes to the rest of the financial sector, are there any more concerns that may impact profitability in margins in this case for the sector?
I think it is very important for the companies to focus on the long term. That is, they need to continue to invest in their own businesses and grow the top line. I think margin should not be the focus in near term because Wipro will need to continue to reinvest in their own employees so that their capabilities are in line with what the work is being expected from them. So a few years back, there was a capability mismatch between what capabilities IT services companies had and what deals were coming through. So I think right now investing in the people, making sure they are skilled in the new opportunities, that is cloud, machine learning, and other stuff, that becomes more important. So I think margin should not be the prime focus for the investors in near term.
Sure. In that case, Trip, well, it's an end of an era as Azim Premji steps down. From here on, what would you like to hear from the management of Wipro specifically with respect to the future?
I wouldn't say it's the end of the era. I think if you think about Premji had been really not at the helm for the last 4, 5, 6 years. So I wouldn't say it's symbolic in nature because he is well respected across the whole world. But I think Indian Wipro will continue to chug along. But I wouldn't say that's an issue at all.
Sure, Trip. We'd like to thank you for joining us and giving us your initial take on Wipro. Of course, we'll be watching out for some of those factors, but I'm told we still have Dipesh with us. So, Dipesh, if you've had some time to go through the numbers, your take now, you have suggested that they're looking largely in line. What's the view here? Anything that stands out for you in the fine print?
No, I think company has yet to upload some of the documents on exchanges, but broadly the number which we have so far, number seems to be broadly in line with expectation. And for incremental detail, I think we have to wait for some time.
All right, Dipesh, we'll get back to you on that one then. Thanks so much for joining us and giving us your initial take as well. So there you have it. Wipro, well, the numbers are largely in line according to both the experts that we've spoken about. And for now, it does seem that because of the fact that profitability is higher, and we've also seen a little bit of an improvement in margins, EBIT margins specifically for IT services, that may bode well for the company. Moving in, let's also address the markets right now. And well, to start off with, we do have gains, about 0.2% gains coming in on Indiabulls Housing Finance. Advances for UPL, State Bank of India and Kotak Mahindra Bank along with Tech Mahindra. It's the two heavier weighted banks which are actually keeping the markets buoyant. And on the losing end, we do have weakness in Yes Bank, Eicher Motors and GAIL India. Of course, ONGC, the other counter, which is also losing out. The broader markets, well, fairly evenly poised between gainers and losers. Very flattish for the NSE 500. Diwan Housing Finance, CG Power and IRB Infra also advancing. On the other hand, DCB, Tata Elxsi and Edelweiss Financial declining. And of course, Yes Bank's earnings are awaited, so we'll be watching out for that one as well. But on that note, let me get in our markets editor, Neeraj Shah, for his views. Neeraj, what have you made of this day?
Well, interesting day of trade again. Some bit of further build up on the banks in trade today. Remember, yesterday was a similar thing wherein the banks did reasonably okay, and in today's session, the banks are doing well.
Right.
Led predominantly by private sector banks today, though you must say that SBI too did well. Now, the sentiment would have been spoiled by DCB. I think the market is awaiting Yes Bank today, Bandhan Bank tomorrow, and HDFC Bank coming this Saturday, because the start of the the start of the earnings season from a bank's perspective for slippages hasn't been that great.
Right.
Can the remaining banks reverse that? So that's the one thing. Your sector did very well. IT kind of was the saving grace today.
Yes, yes.
Let's wait and watch if Wipro's good numbers also give that bit of a fillip. I don't know. You would probably know this better. But they seem to be doing okay. But Asia was flat. Didn't expect this one to do anything more.
Yeah.
Not a bad day.
And of course, we have the big boy Reliance Industries also announcing earnings on Friday. So yes, we'll be watching out for that. Well, Neeraj, thanks for that perspective there. So it's going to be banks essentially, which is going to perhaps drive the markets moving on. We'll be watching out for that. But on that note, let's shift focus to a bunch of stocks that we want to keep an eye on. And right at the top, we have news in the aviation sector. So we do have Jet Airways, which has actually done well in today's day of trade. It's locked in an upper circuit of 5%. And we have Vishwanath Nair, who's been following the space very, very closely, joining us to give us an update on the same. Some good news, Vishwanath?
So yesterday, there was a meeting between the Committee of Creditors for Jet Airways, because it's under the insolvency process. So that was the first meeting since the company got admitted earlier this month. So the point of the meeting was to finalize some of the key issues with respect to how to go about the market, seeking an investor for the airline. So to that effect, the lenders have decided that by the end of this week, the resolution professional for the company will be putting out an advertisement seeking EOIs. Right. The second point that they decided is that tomorrow, on Thursday, they will be putting to vote a proposal to raise about $10 million in interim funding. Now, this money will be used for any urgent dues that Jet Airways may have. Remember that the airline has been grounded since 18th April, so there are no operations, but there is some back office work that's still pending.
Right.
So the airline will try and use that money to pay off employees who will work there, plus any other administrative dues there might be. More importantly, however, outside the IBC, the lenders have decided that they're going to go for a deeper forensic audit of Jet Airways' books. So that is an important point because, last year in December, the lenders had initiated a forensic audit. That was a very narrow forensic audit according to what Bloomberg Quint had reported also in January. It focused only on a very specific set of parameters on the books. So now the lenders are saying that since that audit itself found some discrepancies in the Jet Airways books, so there is a need to look at the books in a deeper manner. So they've started preliminary talks with EY, and eventually once that is finalized, then of course EY will be doing a complete thorough audit. The reason keep it out of the IBC is because so that the new bidder, whoever comes in to buy Jet Airways, does not get impacted by the findings that might be there. So that can be dealt with between the lenders and the previous management of the company.
Right. Okay. Well, keeping an eye on that one. Vishwanath, thanks for joining us and getting us those details on Jet Airways. And moving from there on to two other stocks which have also been buzzing in trade. At least one of them has had a disastrous trading day. But I'm going to give it over to Sharad Dubey to join us, who's joining us to give us an update on these two stocks. Sharad, what's made on your list?
Yes, two stocks I made to my list, and first one being Dhanlaxmi Bank. The numbers came out, decent numbers that came out, and the asset quality was also stable, and the GNP ratios are stable. Now, if you see what the stock reaction was, you see there was a rally happening in the month of July itself, and the stock rose as high as almost 5% and ended the day marginally down at around 18 rupees per share. Now, if we go through the numbers, the provisions have actually fallen down at a very good rate, and it's around 9 crore for this quarter, while for the previous quarter it was around say 16 crores. And apart from this, if we see, the management talked to Bloomberg Quint, and they told that they are aiming that the gross NPS will be less than 7% by the end of the December quarter. They were also very hopeful that they'll raise funds via fresh equity issues, and they also aim to grow their credit book by 7,000 crores by the end of the financial year. The next stock which is there is the other side of the earnings, and Tata Elxsi has come out with a bad side of numbers. And if you take the standalone numbers, it has really come out bad, and this is mainly because the company is having a significant exposure to JLR. Now the numbers have been taken on year, and let's see how the stock has reacted. You see the stock has reacted. The stock has fallen almost 9% today, and heavy volumes were seen throughout the day. And the stock ended at around 742 odd rupees. Even the margins, if you say, they have fallen down almost 41% EBIT margins. And also the software development services revenue has fallen by almost 4.7%. So there was a bad performance, indication was there in the revenues going ahead. So these two stocks were there, Agam, in the mid-cap space buzzing.
All right, thanks so much for that, Sharad. So we continue to keep an eye on some of these banks as we've been talking about. And on that note, it's a wrap on the markets, but lots more lined up. Stay tuned to Bloomberg Quint.